Hello. I wanted to get with you and talk with you a little bit about posting journal entries and creating a trial balance. So I'm going to go ahead and split the screen. And of course, you see the expanded accounting equation, which of course is assets equal liabilities plus equity. You see the expanded equation. You see the T accounts, like for assets. You see debits and credits. And remember that for each account, a debit is basically the left-hand side and a credit is the right-hand side as you're looking right at that transaction. Um, Remember that the increase side is the normal balance of all these accounts. So normal balance for an asset's a debit, for a liability is a credit. Remember that the plus is the increase side, the minus is the decrease side. And I worked a few transactions over here. And just a kind of a quick reminder, kind of how you would do a journal entry. There's other recordings on that. But let's say a company issues stock for $100,000. You ask yourselves these three questions. What accounts are involved with the transaction? In this case, common stock and cash. Where do these accounts fall within the accounting equation? So you would go over, and cash, of course, is an asset. Common stock would fall under common stock. And then you would say, are these accounts being increased or decreased? So if we're issuing stock, we're increasing the amount of stock we have. So that would be an increase to common stock. And if we're getting in cash, we're increasing the amount of cash we have. So that would be an increase to cash. So that would be an increase for common stock and an increase for cash. And then we would use the chart, and an increase to an asset is a debit. So that would mean we're going to debit cash, and an increase to common stock would be a credit. So that means we're going to credit common stock. So if we were writing the journal entry, we would debit cash. We always show the debit first. We've got a little debit and credit column here. Then you would show, and do a slight indentation. You would show the credit on the second line. You see common stock here. And then a short description of what you did, which is to issue common stock for cash. So there was another video I did where I went through a lot of transactions and things of that nature. But what I just kind of wanted to do a little reminder really quickly there. But I've got about five or six transactions here. This one, got one where we purchased equipment for 25,000 in debit equipment, credit cash. I've got a handful of transactions here. And what I want to do is I want to show you how to post those to T accounts. T accounts, like you see here for cash, notice that all of the asset accounts, fall kind of under the asset T account. So all these are asset accounts. And what I want to do is posting to these accounts simulates posting transactions to the actual accounts. So you write up a journal entry and then you post it to the accounts. And that's kind of what this activity is going to simulate here. So, let's kind of post these to the accounts. So we would have a debit for cash. So I would go over here to cash and put in a debit for $100,000. And then we have a credit to common stock, which I would put in here for $100,000. Then I would go down to the next one, and I have a debit to equipment and a credit to cash. And so I would put in equipment for $25,000 as a debit. And then I would go up and put in a credit to cash for $25,000. So after you write up the journal entry, that journal entry has to be posted to the accounts. And this kind of represents, all these T accounts represent the accounts that you're posting to. So let's do it with the next one here. We have office supplies debit for 2,000 and accounts payable credit for 2,000. This would mean that we bought office supplies on account. So I would go up here, and I'm going to go down. Let's see. Office supplies for 2,000. And then accounts payable credit for 2,000. Now, the good thing about this is that anytime you can make sure that your basically the accounting equation is in balance. You can just add up the balances in the accounts, and you should be able to check whether the accounting equation is in balance or not. We'll do that at the end. So let's look at the next one. We actually performed a service for a customer. So they paid us cash, and we recognized the revenue. So debit to cash and credit to service revenue. So we got $5,000 cash. So that would be a debit to cash. And again, if it's a debit, we're showing it on the debit side of the T account. And if it's a credit, we're showing it on the credit side of the T account. And then service revenue would be a credit over here for 5,000. Notice that that most of the transactions are being reflected on their normal balance side also. Now, let's go down. Let's see. Let's say this time we performed a service and the customer agreed to pay us later. So we debited accounts receivable and credited service revenue. So I would go over here and put 4,000 in accounts receivable. And I would put 4,000 in the service revenue. And let's go down to the next one. Let's pay some expenses now. So we're recording some expenses. So we paid salaries of 3,000. So that would be a debit to salaries expense for 3,000 and a credit to cash for $3,000. So we would go over here, and that would be a credit to cash for 3,000 and a debit to salaries expense for 3,000. And then the last one, we paid dividends of 2,000. So that would be a debit to dividends and a credit to cash. So we would go up here in dividends. Was that 2,000 or 3,000? 2,000. So it would be 2,000 right here for dividends. And we would go over, that would be basically 2,000 for cash. So we've written journal entries to record all those transactions, and we've posted them to the accounts where they belong. Now, when you've got T accounts, if you want to find out what the balance in the T account is, you simply take the larger side minus the smaller side, and the difference will give you your larger side balance. Larger side minus the smaller side, and the difference will give you your larger side balance. So in this case, we've got 105 minus 25 would equal what? 80 minus 5 would equal 75. So we would have a $75,000 balance in cash. And if there's only one transaction, then of course that is your balance. So accounts receivable has a $4,000 balance, equipment has 25, and office supplies has 2. Now, if we were to add all that up, we would be looking at what? $106,000. Yeah, we'd be looking at 106,000 on this side of the equation. On this side of the accounting equation. And if we were to add the other ones up, we've got 2, we've got 100. Now, if you have a situation where you have 2 transactions of the same type, in this case, both credits, we would just add those up. So that would be 9. And then we have 3 and 2. So looking at the other side, the liabilities plus equity, we've got what? 102, we've got 111, minus 3, minus 2, we've got 106 on this side as well. So we know that the accounting equation is in balance. Now, there's one other thing that we want to do here, and that is we want to run a trial balance at this point. Now, what a trial balance is it's really just making sure that your debits and credits are in balance before you go on to anything else. Making sure your debits and credits are in balance before you move on to anything else. So in this example here, if we would list the name of the company, the name of the statement, which is the trial balance, and the trial balance is, as of this moment in time, do our debits and credits agree? Are we in balance? Now, when you do a trial balance, you want to start up here with all of the balances in the assets, just work your way down, and then move your way across the accounting equation. And if it has a debit balance, you list it in the debit column. If it has a credit balance, you list it in the credit column. Now, one thing to notice here too, I'll say this, notice that all of your accounts have the balance with their normal balance side. Remember that the plus side is the normal balance side of all the accounts. So all of the assets, you'll notice, have a debit balance, which is their normal balance. All of the liabilities have a credit balance, capital stock, credit balance, revenues, credit balance. All those had normal balances that were credit. And then the expenses and the dividends have normal balances that are debits, which is their normal balance. So let's start taking some of these balances. So cash is 75 and accounts receivable is 4. So let's just start bringing over some of the balances. So cash would be 75 and accounts receivable would be 4. And now let's go over and get a couple of more balances. Equipment's 25 and office supplies are 2. Equipment's 25. And then 2,000 for office supplies. Now, we would then want to work our way also across the accounting equation. So the next would be liabilities. So accounts payable of 2 with a credit, and common stock with 100,000 of a credit as well. So I'm going to work my way down there. And I'm going to list what accounts payable. And that's going to be what, 2. And then 100,000 for common stock. And then I think we next have service revenues for 9. And then we would have our expenses. So we would have our salaries expense, which would be what, 3,000. And our dividends, which would be 2,000. And let's go ahead and add this up. So on the debit side, we would have 111. And on the credit side, we would also have 111. So our debits and credits are in balance. And that's really what you want to see. The trial balance basically just says our debits and credits are in balance before we move on to something else. Now, the trial balance would be completed at the end of the period after all of the regular transactions have been journalized and posted to the accounts. We would go in and do a trial balance that shows that basically all our debits and credits are in balance before we move on. Now, there would be other versions of the trial balance. You would do what's called a post-closing trial balance, or before you basically did your financial statements. And then you would do a closing trial balance at the very last thing at the end of the period. And you would just make sure that, again, your debits and credits are in balance before you close out the month and move on to the next. period of time or month. So have a great rest of the week. And again, let me know if you have any questions. Take care. Bye-bye.